Stop me if you have heard this one before. You finally find the perfect apartment, the one with the view you wanted and the extra bedroom for a home office. Or maybe you are standing at the dealership, looking at that truck you need for your contracting business. You feel good. You have the income. You have the down payment saved up in your savings account. You are ready to sign and start the next chapter of your life. But then, the finance manager comes back. He is not smiling anymore. The mood in the room shifts. He lowers his voice, looks at his computer screen and says, "I am sorry, but the bank declined the application." Or maybe he says, "We can get you approved, but the interest rate is going to be 14%. It is humiliating. It is frustrating. And let's be honest, it is expensive. Bad credit is not just a number on a screen. It is a tax. It is a poverty tax. It is a tax on your car insurance, your mortgage, your credit cards, and even your utility bills. Did you know that in many states car insurance companies charge drivers with poor credit nearly double what they charge drivers with excellent credit, even if they have a perfect driving record? Over a lifetime, a sub-600 credit score can cost you over $200,000 in extra interest payments and fees. Think about that number. $200,000. That is a house. You are losing an entire house, or a fully funded retirement, purely because of a 3-digit number. The industry tells you that you are helpless. They tell you that you are irresponsible. Or, they tell you that you need to hire a credit repair agency and pay them $100 a month to fix it for you. They promise magic results, take your monthly subscription, and send out generic template letters that often get flagged as spam by the bureaus. I am here to tell you, do not do that. Do not pay someone for something you can do better, faster, and for free. No one cares about your financial future as much as you do. My name is Conrad, and welcome to the Wealth Architecture channel. Today, I am going to save you thousands of dollars. We are doing a deep dive, a complete masterclass, on DIY credit repair. I am going to show you exactly how the FICO algorithm works, not just the basics, but the advanced mechanics. We will talk about how to read your report like a forensic accountant, and how to use federal laws, specifically Section 609 of the Fair Credit Reporting Act, to force the bureaus to delete negative items. No monthly fees, no lawyers. Just you, me, and the law. If you are ready to stop letting banks dictate your life, do me a favor right now. Smash that subscribe button and turn on notifications. We are building a community of financially sovereign individuals here, and I don't want you to miss the next blueprint. And tell me in the comments below, what is your goal score for 2026? Is it 700, 750, 800? Put it in the comments. Writing it down is the first step to making it real. Let's get to work. First, we need to clear up a massive misconception. Most people think their credit report is a government record. They think it is a permanent file kept by the authorities in Washington. It is not. The credit bureaus, Experian, TransUnion, and Equifax, are private for-profit data companies. Their product is you. They gather data on you from banks, courts, and lenders, package it up, and sell it to other banks. And like any data company, they make mistakes. Millions of mistakes. The Federal Trade Commission found that 1 in 5 Americans has a material error on their credit report. That means there is a 20% chance your score is lower than it should be right now, purely because of a typo, a merged file, or an old debt that should have fallen off years ago. So, before we can hack the system, we have to understand the code. The credit bureaus want you to think this is magic. It is not magic. It is math. Your score is calculated based on 5 factors. I want to break these down in detail because understanding the weighting is how you prioritize your battle plan. First, payment history. This makes up 35% of your score. This is the big one. One missed payment, just 30 days late, can tank your score by 80 to 100 points overnight. And it stays on your report for 7 years. 7 years. That is longer than most marriages. It is the heaviest anchor on your ship. Second is amounts owed, or utilization. This is 30%. This is the ratio of your credit card balances to your credit limits. If you have a $1,000 limit and you spend $900, you look risky. You look desperate to the algorithm. We will talk later about the AZO method to hack this specific factor. Third is length of credit history. which is 15%. This is why you should never, ever close your oldest credit card, even if you don't use it. That card is the anchor of your history. If you close a 10-year-old card, your average age of accounts drops, and your score drops with it. Fourth is credit mix, at 10%. Lenders like to see that you can handle different types of debt. They want to see revolving credit, which is credit cards, and installment loans, like a car loan or a mortgage. Having only one type keeps your score stagnant. And fifth is new credit, another 10%. This is your hard inquiries. Every time you apply for a card, your score dips a little. Too many inquiries in a short time makes you look thirsty for cash. Today we are focusing on the biggest slice of the pie: payment history and derogatory marks. I am talking about late payments, collections, charge-offs, and repossessions. These are the items that make lenders run away. Most people think, well, Conrad, I missed the payment. It is true, so it has to stay there. Wrong. This is the mindset shift you need to make today. The Fair Credit Reporting Act, or FCRA, does not say that items on your report must be true. It says they must be 100% verifiable, accurate, and timely. Read that again in your mind. Verifiable. If the credit bureau cannot prove, with documentation, that the debt is yours, that the dates are accurate, that the amount is correct to the penny, and that they validated it within 30 days of your dispute, by federal law, they must delete it, even if you actually owe the money. That is the loophole, and that is what we are going to exploit. Step 1 is the diagnosis. You need to stop using Credit Karma for this. I love Credit Karma for checking my daily pulse or looking for card offers, but for surgery, we need the MRI. Credit Karma uses the VantageScore 3.0 model. Lenders do not use VantageScore. They use FICO. Plus, Credit Karma gives you a summary. We need the raw data. You need to go to annualcreditreport.com. This is the only government-authorized site to get your reports for free. You are legally entitled to these reports every week. Download all three: Experian, TransUnion, Equifax. Do not just look at the score. Print them out. Yes, on paper. Grab a highlighter. We are going to find every single negative item. But wait. Before you look at the debts, look at the very top section. Personal information. You will likely see 5 different spellings of your name, 3 old employers, and addresses where you lived in college 10 years ago. You might see a variation of your social security number or a phone number you haven't used since 2015. Here is a secret the banks don't tell you. The credit bureaus use this old data to verify your debts. It is called matching logic. If a collection agency has your debt linked to your old apartment address from 2018 and you delete that old address from your credit report, suddenly, the link is broken. When the automated system tries to match the debt to your file, it hits a roadblock. It cannot match the address. So, your first action step, before you dispute a single penny, is to clean up your personal profile. Call the bureaus, yes, on the phone, or send a letter to update your personal info. Delete every old address, every wrong employer, every misspelled name. Keep only your current legal address. Let me tell you exactly what to say when you call. You get a representative on the line and you say, I am looking at my credit report, and I see several addresses listed that are inaccurate. I am worried about identity theft and I need to clean this up. Please remove any address that is not my current residence. If they ask, did you live there? You say, that address is not accurate to my current profile and I want it removed. Be firm. They might push back. If they say an address is linked to an active trade line, they might not delete it. That is fine. Get rid of everything else. This one step alone can make your future disputes 50% more effective because you are removing the data points that collectors use to validate the debt. Have you ever looked at your report and seen an address you don't even recognize? That is a huge red flag for identity theft. If you see that, you freeze everything immediately. Now, we enter the battlefield. You have cleaned your personal info. Now you are looking at the negative items. Maybe it's a medical bill from 3 years ago. Maybe it's a credit card charge-off from a time when you lost your job. You want it gone. Rule number 1. Never, ever dispute online. Do not click that blue dispute button on the credit bureau's website or app. Why? Because when you click I agree on their terms of service, You are often waiving your rights. You are agreeing to let their computer system decide your fate. Their computer system is called eOSCAR. It stands for Online Solution for Complete and Accurate Reporting. It sounds fancy, but it is actually very lazy. When you file an online dispute, eOSCAR scans your text, categorizes your complaint into a 2-digit code, like code 01, not his/hers, and sends a ping to the bank or debt collector. The data collector's computer pings back, "Yes, we have a record," and eOSCAR says verified. The whole process takes seconds. No human eyes ever looked at your evidence. You lose instantly. We are going old school. We are sending physical letters. Why? Because a physical letter must be handled by a human. It creates a paper trail that holds up in court. If they screw up the timeline on a physical letter, you have proof. If they ignore a click online, good luck proving it. You have probably heard of the Section 609 letter on TikTok or Instagram. It is often sold as a magic bullet. Let's separate the hype from the reality. Section 609 of the FCRA gives you the right to request the source of information. It states that you have the right to know what is in your file and where it came from. So your dispute letter isn't just saying, "This isn't mine." You are saying, "I don't see proof that this account belongs to me. I am demanding verification. Please provide the original contract with my signature and the payment history." Guess what? The credit bureaus don't have your original contract. They are data aggregators. They have to ask the bank or the collection agency. Often the collection agency bought your debt for pennies on the dollar. They bought a giant spreadsheet with your name, a number, and a balance. They don't have the original contract. They don't have your signature. They don't have the billing statements from 5 years ago. If they can't produce the documents to verify the debt within 30 days, delete. It must be removed. I want to walk you through how to write this letter. I cannot stress this enough. Keep it professional, but firm. Your letter needs to include your updated personal info. It needs the name and account number of the negative item. And it needs the magic phrase, "I am exercising my right under the FCRA to request verification of this item." If you cannot verify it with the original instrument of indebtedness, you must delete it immediately. And here is the kicker. Send it certified mail with return receipt. It costs about $4 or $5 at the post office. You will get a green postcard back in the mail when they sign for it. That green postcard is your golden ticket. It starts the 30-day clock. Under federal law, they have 30 calendar days to complete their investigation. If they do not respond in 30 days, they broke the law, and you can force a deletion. Now let's talk about a reality check. What happens next? You send the letter, you wait 35 days, and you get a letter back from Experian. It says, "The item was investigated and verified." Does that mean you give up? Absolutely not. This is where most people quit, and this is exactly what the bureaus count on. They verify almost everything in the first round, hoping you will go away. When they say verified, your next question should be, how? This leads us to round 2, the method of verification letter. You are going to send another letter. You are going to say, "You claim this item is verified. Under the FCRA, I have the right to know the method of verification. Did you call the creditor? Did you review physical documents? Who did you speak to? Please provide the name and address of the person who verified this debt, and send me the physical proof they provided." They almost never have this. They didn't call anyone. They just use the eOSCAR computer system. By demanding the method of verification, you are exposing their laziness. You are putting them in a corner. Often simply sending this second, more aggressive letter is enough to get them to delete the item because they know they cannot prove they did a real investigation. But let's say they are stubborn. Let's say Experian is ignoring you. Now we bring out the nuclear option. We are going to file a complaint with the CFPB. The CFPB is the Consumer Financial Protection Bureau. It is a federal government agency, and the credit bureaus are terrified of them. When you file a complaint on the CFPB website, you upload your proof. I sent a dispute on this date. They failed to provide the method of verification. They are violating the FCRA. The bureaus have to respond to the CFPB within 15 days, and this time, a real human from their legal or compliance department has to look at it. They cannot just use a bot. I have seen hundreds of stubborn collections vanish within days of a CFPB complaint because it is simply cheaper for the bureau to delete your item than to risk a federal audit or a fine. Now let's pivot. What if the dispute process is exhausted? What if the debt is legitimate, the collector has all the paperwork, and they are not backing down? Disputes didn't work. Now we move to Plan B, negotiation. This is specifically for accounts in collection. First, a major warning. Before you call any collector, you need to check the statute of limitations in your state. Every state has a limit on how long a creditor can sue you for a debt. In some states it is 3 years, in others it is 6 or 10. If your debt is time-barred, meaning it is older than the statute of limitations, they cannot sue you. You are safe. But if you make a payment, even $1, or if you acknowledge the debt on the phone by saying, "Yes, this is my debt," you might restart the clock. You could accidentally reset a debt that was about to expire. So, check your state laws first. If the debt is within the statute of limitations and you want to clean it up, we use the pay-for-delete strategy. Most people panic when collectors call. They just want it to stop, so they pay the collection agency the full amount. Stop. Do not do that yet. If you pay a collection, the status on your report changes from unpaid collection to paid collection. Guess what that does to your credit score? Nothing. Absolutely nothing. It is still a negative mark. It still screams, "I didn't pay my bills," to future lenders. FICO 8 does not distinguish between paid and unpaid collections in terms of the damage to your score. You need leverage. The collection agency wants your money. They probably bought your $1,000 debt for $50. If you pay them $500, they make a huge profit. You want a clean report. This is a business transaction. You are going to send a letter, or call, but record the call if it is legal in your state, and you are going to say something like this: "I am looking at my records, and I am willing to settle this account for 40 or 50% of the balance. However, I will only make this payment on the condition that you delete this account from my credit report entirely." They might say no at first. They might say, "We can't do that. It's against policy." That is usually a lie. Hang up. Call back in a week. Eventually, you will find a manager who wants to hit their monthly quota. When they say yes, you say, "Great. Email me that agreement on company letterhead stating that upon receipt of payment, you will request the deletion of this trade line from all 3 bureaus." Once you have that letter in your hand or your inbox, you cut the check. Not a moment before. Never trust a collector's word. If it is not in writing, it did not happen. Now, what about late payments on a credit card that is still open? Maybe you have a Capital One card you have had for 5 years, but you missed a payment 2 years ago because you were sick or laid off. You can't dispute it because it is your active card and the rest of the history is good. You can't negotiate a pay-for-delete because it's not in collections. For this, we use the goodwill deletion letter. This is not a legal demand. This is a request for kindness. You write to the CEO's office, yes, look up the CEO's address or email, and you explain your situation. You say, "I have been a loyal customer for 5 years. I messed up 2 years ago because of a medical emergency. Since then, I have been perfect. This one late mark is hurting my ability to buy a home for my family. Would you please consider removing it as a gesture of goodwill?" You would be shocked at how often this works. It works because it goes to the executive office, not the low-level customer support. I have seen late payments vanish just because someone asked politely and explained their story. The bank wants to keep you as a customer. If you are a good customer now, they might just do you a favor. While you are fighting these battles to remove the bad stuff, you must be building the good stuff. You need to play offense and defense at the same time. You cannot have a 800 credit score with an empty report. You need active, positive trade lines. If your score is low, no one wants to give you a premium credit card. So, you get a secured credit card. You put down $200 as a deposit. That deposit protects the bank, so they approve you. That $200 becomes your credit limit. Here is how you use it. You buy 1 tank of gas or 1 Netflix subscription. You wait for the statement to generate. Then, you pay it off immediately in full. Do not carry a balance. Carrying a balance does not help your score. It just costs you money. By paying it off every month, you are building a perfect payment history. Now let's talk about the ASIO method, all 0 except 1. This is for maximizing that utilization factor we talked about earlier. Let's say you have 3 credit cards. If all 3 show a balance, even a small one, the FICO algorithm penalizes you for too many accounts with balances. To get the absolute maximum score, you want 2 of your cards to show a $0 balance on the statement date and 1 card to show a tiny balance, like $10 or 1% of the limit. This proves you are using your credit, so you are not inactive, but you are managing it perfectly. I have seen this method alone boost scores by 20 points in 30 days, just by paying down balances before the statement cuts. Another powerful hack is the authorized user strategy. If you have a parent, a partner, or a friend with perfect credit and a card they have had for 10 years, ask them to add you as an authorized user. They do not even need to give you the card. They can cut it up. They don't have to give you access to their money. But when they add you, the entire history of that card, the 10 years of perfect payments, the high credit limit, will be copied and pasted onto your credit report. It's like inheriting a good reputation. I have seen scores jump 40 or 50 points in 30 days just from this one trick. It is especially powerful for young people or immigrants who have a thin file. I also want to touch on medical debt, because this is a huge issue for millions of Americans. The laws have changed recently. As of 2023, medical collections under $500 generally do not appear on credit reports anymore, and paid medical collections must be removed. So if you have small medical bills dragging you down, check if they should even be there. If they are under $500, dispute them immediately, citing the new reporting policies. They should vanish instantly. Listen, I know this sounds like a lot of work. Printing letters, going to the post office, arguing with collectors, tracking dates, monitoring your score. It is work. I won't lie to you. It is a part-time job for a few months. But remember what is at stake here. If you fix your credit score and go from a 580 to a 740, the interest rate on your future mortgage drops significantly. On a $400,000 home, the difference between a bad credit interest rate and a good credit interest rate saves you about $800 a month. $800 a month. That is $10,000 a year of post-tax money staying in your pocket instead of going to the bank. Is it worth spending a few Saturday afternoons writing letters to save $10,000 a year for the next 30 years? That is $300,000 over the life of the loan, plus the savings on car insurance, plus the cash back you will earn when you finally qualify for the best rewards cards like the Chase Sapphire Reserve or the Amex Gold. This is how you build wealth. It is not just about making more money. It is about stopping the leaks in your bucket. Interest is a leak. Bad credit is a leak. That is how you become the architect of your financial future. This process takes time. It might take 3 months, it might take 6. Do not get discouraged if the first letter comes back verified. Send the second one. Demand the method of verification. File the CFPB complaint. Be a nuisance. Be persistent. The squeaky wheel gets the grease, and the persistent disputes get the deletions. The banks are counting on you being lazy. They are counting on you giving up. Do not give them that satisfaction. There is one more thing you need to watch out for, and this is crucial for 2026. The bureaus are getting smarter. They are using AI to scan disputes. If your letter looks like a generic template you downloaded from a sketchy website, they might flag it as frivolous and ignore it. That is why you need to customize your letters. Use your own font. Make the language sound like you. Do not just copy-paste legalese you don't understand. Make it personal. I checked my records and I don't recognize this account number. That is better than 3 paragraphs of legal statutes copied from a forum. Also, be careful with credit repair companies that promise to sweep your report in 30 days. Many of them use illegal tactics, like claiming identity theft when it didn't happen, or filing false police reports. That is fraud. Do not commit fraud. We are doing this legally, using the rights Congress gave us in the FCRA. We are holding them accountable to the standard of maximum possible accuracy. If they cannot prove it, they must remove it. That is the law. Let's recap the battle plan. Step 1. Get your official reports from annualcreditreport.com. Step 2. Clean up your personal information and remove old addresses to break the matching logic. Step 3. Dispute negative items using certified mail, demanding verification, not just investigation. Step 4. If it is verified, demand the method of verification and consider a CFPB complaint. Step 5. If it is a valid collection within the statute of limitations, negotiate a pay-for-delete in writing. Step 6. Use goodwill letters for active accounts with late payments. Step 7. Add positive history with secured cards and authorized user status, and use the AZEO method to optimize your utilization. This is not just about a credit score. This is about freedom. It is about the freedom to live where you want, drive what you want, and start the business you dream of without being rejected. Credit is the lubricant of the American economy. When you have it, everything moves smoothly. When you don't, the engine seizes up. You have the tools now. You have the knowledge. You are no longer in the dark. The banks bank on your ignorance. They profit from your apathy. They assume you will just give up and pay the higher rate. Prove them wrong. Take control of your name and your financial reputation. If this video gave you value, if it gave you a roadmap you didn't have yesterday, please share it with a friend who is struggling. We all know someone who is drowning in debt or stuck with a bad score. Send this to them. Help them get out. And don't forget, we have linked the resources and guides we talked about in the description below, along with the templates for the letters. Next week, we are talking about the best 0% APR cards to transfer your debt once you've cleaned up your score. You do not want to miss that, because that is how we kill the interest while we fix the history. I'm Conrad. This is Wealth Architecture. Build it right, and it will last forever. See you in the next one.